Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 3rd, 2021. As always, please don't forget to hit the like button, subscribe to this channel if you haven't already done so, and share this video with others. This is basically what keeps me going, what motivates me to record this video. So please, do that. Hit the like button at the very least. Today we will look at stocks. Large caps have hit new records, small caps are catching up. We'll look at market breadth again as it improves even further. We'll give an example of a recent trade for Uranium ETF, which is up 29% since recent alert. Treasuries really haven't moved much, but the bearish bias is still there. And dollar is stalling at resistance as precious metals push higher. So we'll look at all of those topics. If you have my subscription, if you haven't yet subscribed, consider subscribing. I have two newsletters. One is called Elite. You can see we're going to cover mostly Forex, various ETFs. We'll look at Bitcoin and some of the large cap stocks as well. And the second newsletter I have is the Speculator, and we're going to cover all of this newsletter, all of those stocks there. So sign up at my website, MasterChartsTrading.com. Let's get right to it. So S&P 500, there is new records today, again new records. So this stock market seems to be unstoppable. Nothing has again really changed for us in the analysis of this stock market. You can see that we have become bullish back in April of last year, and this is the breakout that occurred back there. The last opportunity really to get in was on the 12th of June. Now again, I'm using my own proprietary MasterCharts trading price action indicators. You can see them on this line. This is a green, blue, red, and yellow line. So if I turn them off, the stock market looks like this. How would you know where to enter? How would you know where to buy? So what I obviously do is I use my indicators to trade, and they show you very well where to enter. And the latest opportunity was back in April of last year, and then where to exit. You trail, you advance, you move your stops. Let's say you entered back in April of last year, and the stop is at the blue line. So you can see that the blue line has not yet been hit, and it's just been non-stop straight shot higher and higher and higher. Notice again also that the last time the green line was hit was back in November of last year. So this is showing extremely bullish behavior of this stock market. Now there are many different explanations of why this is happening, but we don't really care because we are technical analysts. We only look at these lines. We only look at what the price is doing. Notice also there is no volume on this chart. I don't use volume. There's also nothing like moving averages. There's a moving average, for example. You can see that the moving average is not what I'm using. There are no other indicators like MACD or RSI. Again, I don't use any of them because really I don't need them. My lines show pretty much everything. Right this instant, not much has again changed. We are looking, this is a new record right there today. Despite all of the bad news, despite Afghanistan, this is Afghanistan right there, fall of Afghanistan. This is January 6th insurrection right there. You can see that nothing really matters. What does matter is the technical picture. And again, we're looking at purely technical picture. So for now, we're going to remain bullish. This is Dow Jones. Overall, very similar to S&P 500. Correlations are very high to the S&P 500, the breakout occurred the same general time around April of last year. The latest opportunity to buy Dow Jones was in June of last year. And we continue to hold because we would be advancing our stop. We would be moving our stop from the entry as the stock continues higher. So the advance was, or rather the stop is still at the blue line. So let's say the market now collapses and we would exit at the blue line. We would still be in very good shape because notice that, if we entered back in May, we did absolutely nothing and we exited at the blue line. That's still a 25% gain. That's considering if the market just all of a sudden pulls back. But again, as I keep saying, what if the stock market doubles? So right this instant, it's at Dow Jones is at about 35,000. What if it goes to 600,000 and then pulls back a little bit, like 10%? You see? So we cannot know what's going to happen, and that's why we're simply, using our indicators to continue holding our positions at this point. QQQ, overall very similar picture. The breakout occurred back in April of last year. Currently, we're looking at new records. New records did occur just now, a couple of days ago, on the 1st of September. We're trading very close to new records. Once again, you can see that it's a very, very strong move higher. Really no opportunity to get in. I only want to get in when the blue line is hit, when the pullback is substantial. When the green line is hit, I really don't want to, do anything except for maybe take profits. But for now, we're just holding again, for QQQ, for NASDAQ, for S&P. Small caps slightly differ, but not much different. So overall, very high correlations to the general market. Small caps had an opportunity to get in right there where I'm hovering in September of last year. They surged, made a new record here on 15th of March, and so far have not yet made a new record. So this is what we call a divergence, whereas S&P and other major stock indices continuously make a new record. You can see that small caps kind of been trading flat. However, notice that we are approaching new records. New records are very close, and I'm almost sure we're gonna hit new records. This looks like this time is the charm. So last time the records were hit were in March of this year. We tried several occasions. Here's an attempt in April, another attempt in June, another attempt in late June, and finally we're attempting again right now in September. I think we will hit new records. So we're really close. And once that happens, I think this divergence will be put to rest. In other words, both S&P, the large caps, and the small caps will be moving in lockstep, and this is a good thing for the general economy, and it would put to rest worries of fundamental analysts, because many fundamental analysts would say that, well, but look at the small caps, they're lagging. But I'm like, but look at the correlations. This is the correlations. They're enormous. So you can see they're very positive. Only occasionally the correlations are negative. So looking like we're going to hit new records. So since we're talking about small caps, so small caps, you can see it's Russell 2000, whereas S&P is 500. So Russell 2000, contains 2,000 stocks. The New York Stock Exchange Composite Index contains, I believe, about 5,000 securities. And obviously, if we look at market capitalization, then it's skewed towards the top. But if we look at just the sheer number of stocks, we will say that there are obviously more small caps. So this parameter, New York NYAD, the $NYAD, and you can find it on stock charts, is called advanced decline issue. So it's advanced minus declines. What we do is we take how many stocks went up, and then from that number we subtract how many stocks went down every day. But the trick is we're going to make it cumulative. So in other words, we're going to add the yesterday's number to today's number. Because if we make it just, like just a number, a general number, you can see it's just this meaningless mess. So we must make it meaningful. And to make it meaningful, we make it cumulative. We add yesterday's numbers to today's number. So looking at this number, this is advances minus declines, and this is issues. How many stocks, or there are many things that are traded in New York Stock Exchange. So we're just going to take each one of those and say that if it went up, we're going to say it, +1, but if it went down, we're going to say -1. And then we're going to add all of those up, and we're going to construct this line. So you can see that up till very recently, it's been kind of dragging, and this is the latest high right there where I'm hovering. So this high, you can read it off the chart, is 34,385, and yesterday's high was 34,277. So you can see we're extremely close. It will take very minor push higher by the small caps to make a new record, and that would put to rest again people who analyze the breadth of the market. How broad is the market advance? This is a measure of breadth. Are all of the stocks participating, or are some of the stocks participating? In this case, up till recently, since July, you can see that not all of the stocks were participating, even though the S&P, or you can make it any other measure, was continuously making new records. So once this measure breaks to new records, we will put that worry to rest. Another measure, of course, is New York Stock Exchange Composite Advanced Decline Volume. So this volume is still kind of divergent. So the high occurred here back in June, but the new high has not yet been made. So there is still a divergence going on. So let's see where it takes us. So let's hope, take one step at a time. I think that once small caps IWM breaks to new records, I think that the advanced decline issues will make a new record, and we will watch and see what happens to the volume. Right now it is still somewhat worrisome, because you can kind of see that the volume has been lagging on the upside. So let's see where it takes us in the next few days and few weeks. Moving further, I wanted to show how we trade at MasterCharts Trading. What are we looking for? So this is uranium. It's an ETF that contains stocks that are involved in uranium one way or another. So we really haven't traded it before, but you can kind of clearly see it right there. It was a wonderful opportunity to buy it around October. Would have produced a huge result. However, even if you missed that move, we could still trade it now. And this is what we did. These are again actual alerts. One occurred here on 21st of July, another one right there on the 24th of August. And what we do is, the stock kind of comes down towards the blue support resistance line. Again, why do I use the blue line? I consider, these lines, again, I devised them, I designed them, I programmed them in, I tested them ad nauseum, I used them pretty much exclusively to trade successfully. You can think of them as support resistance. You can also think about them as moving pivots. So you can still think of them as pivot points. If you remember back when there was physical trading in the New York Stock Exchange, and they had what's called pivot points. So this is what I use pretty much exclusively. Latest again opportunity right there on the 24th of August. Pullback occurred towards the blue support resistance line. We bought it right there on 24th of August. We put our stop at the yellow line. Now, once our target was reached, our target is like there. So once the target was reached, we moved our stop from the yellow line. We moved it to our entry, and once the blue support resistance line moved higher, we moved it above our entry. We moved it to the blue line. So right now, I mean, these are new records actually, all-time record high. So one way is to take some profits potentially, especially if you bought options here. I mean, it's 29% move for the stock is well over 100% move for the option. So yeah, it makes sense to take some profits here. But you know, also you can just kind of advance your stop, and then, like I keep saying, you know, we just wait and see how far it will gonna go. It could, you know, double again. It's entirely possible. I mean, notice what happened here from previous opportunity in October. It was $10. It went up to $23. So it more than doubled, you see. So I don't see why it cannot double again. So this is the type of, you know, trades we do. This is the type of pullback trade. So the stock was already in an uptrend. It pulled back. We bought it, and then it rallied higher. All right, so that's a latest example. Let's continue to treasuries, treasury bonds, TLT. So I still think the treasuries are in a downtrend. Why? Because they are below the red line. They, you know, they're making new lows and new lower lows and lower highs. They have pulled back since the low in March, and right now I still consider them to be in a downtrend. So if they're still in a downtrend, we want to be thinking about shorting them or selling them. We don't yet want to be buying them. I want to be buying them if they close above this blue line, blue support resistance line. So projecting into the future, we can project my lines into the future with a 6.0 version. You can kind of see that the lines are kind of moving lower. So the price has less difficulty, less distance to travel towards the bullish levels. They're not that far off, but they're not yet there. So right now, I'm still thinking that we're in a downtrend, and the latest bearish signal, it's still in, you know, in force. So the stop is still above the blue line. I mean, we can definitely advance it. So let's say it moved, you know, stock TLT moved above the blue line, we would get stopped out. But we haven't yet been stopped out. So if we bought puts here, I would be holding our puts. Puts means we're making a bearish bet. We still think that this security TLT treasuries will continue lower. But when or if they break out above the blue line here, we will start thinking that they're going to continue higher. You see how easy my system is? So it's very straightforward. It's very easy to understand. It's also really useful, and it works really well. So for now, TLT, I think, still in a downtrend. So what does that mean? That means that, you know, investors or market participants don't really think that there is a lot to worry about. When or if the treasuries break above the blue line here, it would most likely imply that fear is increasing in the markets. Now, I'm sure this move from the lows here, you say, but Alex, you lost, you know, so much of this move. I'm not trying to catch the bottom. That's not my point. I'm trying to get, you know, to catch the middle part. So, like, for example, I just showed for uranium. We were not trying to catch this bottom here in March. We were trying to catch this move here from when it broke out in April, and then had another opportunity back in October. and then it continued higher. We were trying to catch this move, you see, and it is a large move, you see. We're not trying to catch the very top or the very bottom. That is not what we're trying to do. This is not how trend trading works. So for now, I still think that we're in a downtrend for treasuries, and actually if we close below this red line, which is currently at 145, I think we will consider, buying puts, even more puts. Okay, moving on to dollar and gold interplay. So for now, this is dollar DXY. So for now, I still think that dollar is in an uptrend. It has broken out. It gave us 3 great signals, but they haven't really gone anywhere. So currently, dollar is below support resistance line, this blue line. And it's approaching, bearish levels. So bearish levels for the dollar is at 91.2. Again, if it closes below that level, there is a good possibility of a really strong move to the downside. And if you trade gold, or if you trade precious metals like silver and gold, you need to know what the dollar is doing, because gold and silver are traded in dollars. So XAU divided by USD. we're taking gold and we're dividing it by US dollar. So if US dollar is weakening, in this case looks like it's weakening, gold should be strengthening, and it is indeed strengthening. It seems like it bottomed right here on the 9th of August, even though I still think that it's in a downtrend. But we need to be very flexible and open-minded, and we're approaching bullish levels. You see, bullish levels are not that far off. We're 1.2% away from bullish levels. Bullish levels are at 1853. We're currently at 1827. That's $23 away. You see, that's not far. So if gold closes above this level, I'll have no problem saying that, this trade actually was very successful from 16th of July, and notice a huge move. And if it reverses, that means we need to start buying gold, and we need to start buying gold miners, and there are plenty of oversold gold miners. So we're waiting right now to see which way gold will go. Alternative scenario is gold will turn around and collapse. So it will continue lower and close below this red line, which is 18788. 18788 is the other level. Should it close below it, I think we should sell it short. Okay, but for now it's kind of unequivocal. We'll need to see which way it will break. So I'm just simply waiting to see which way the dollar will go. If the dollar if the dollar continues lower and closes below 91.2, and by extension if gold continues higher and closes above 1862 or so, 1853 if we project forward, then we'll buy gold. That's not a problem. Silver also, I shorted silver myself. I closed it out already, but it's currently again right at that support resistance level. Notice it actually touched it today. So this is, to me, this is a signal to sell it short. I haven't yet sold it short, so I want to see what happens Monday. There is a good chance we will, move higher slightly, but overall the signal is already there. So we could start thinking about selling it pretty soon. And this would depend very much on what dollar does. So if dollar goes up, then we will sell short gold. If dollar goes down, we will buy gold, you see. So we will be waiting and seeing which way this will break. All right, that's it for this week's recap. Head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. Click on products and sign up for one of the product bundles. So one of the most popular ones, of course, is the trading indicators, which are these lines on the chart. green, blue, red, and yellow line. They help you basically find good entry and exit points. It's a complete trading system. There are instructions provided. I have instructions here, training library of videos, and I'm available also to help. If you're interested, I have 2 newsletters. One is called Elite, where we trade ETFs, large cap stocks, Forex, gold, commodities. And we have Stock Speculator newsletter, where we trade exclusively breaking out stocks that are in new uptrend. Additionally, we have what's called a stock screener. So let's say you are looking for stocks that are breaking out above the blue line or closing below the red line, then you can also get that. So that's the ultimate bundle. Very useful in my opinion. I use it all the time. Additionally, we have a MetaTrader 5.0 plugin right now, and we're also we're working on developing a MetaTrader 5.0 expert advisor. So if you're interested, we do have available slots to test the MetaTrader advisor. So if you're interested, sign up or rather send me a message, contact. All right, that's it for this week's recap. Again, don't forget to hit the like button, subscribe to this channel, share this video. This is what keeps me going. So again, thank you for your likes, thank you for your support, and have another great trading week. Bye-bye.